Hey everybody, Randy Elgin with Keller Williams Realty, SA Realty Watch Group. Here again talking about resources. I'm with my friend Tim Malcolm. And before I tell you what he does, I want to know if any of these names ring a bell with you. Tom Selleck, Fred Thompson, Henry Winkler, Robert Wagner, and Jerry Orbach. Now these are all celebrities, right? And obviously I'm not a celebrity, and are you a celebrity?
Not yet.
Not yet? Okay, you're working on it though, right? Okay. So the reason why I bring them up is because they all promote something or have promoted something on the television called a reverse mortgage. Well, Tim Malcolm is my reverse mortgage go-to guru. How long have you been doing reverse mortgages?
It's been about 15 years.
15 years. And what were you doing before that? Were you traditional mortgages? Or?
No, prior to that, I was a national level manager for the Xerox Corporation for 35 years.
Oh, wow. Okay. So have you ever had a time in your life when a friend comes up and doesn't ask you about reverse mortgages, but asks you, hey, Tim, where do you get your car serviced, or some other resource that you don't really have any kind of connection with?
Not often, but occasionally I am asked my opinion or my thoughts on something.
Okay. And they ask you because they trust you, right?
I hope so.
Okay, so that's kind of like the celebrities we just talked about.
Yeah.
They're hoping that the consumers out there are going to listen to them. They like Tom Selleck, so hey, I'm going to find out about this reverse mortgage thing. So the reason why I wanted to interview Tim is that every time I bring up a reverse mortgage with somebody, I get one of the two things. Typically it's, oh, I don't trust those, or I don't know anything about it. Sometimes somebody will know something about it and they go, well, I don't want to give my house to the bank because I brought my kids up. I want my kids to be able to have my house. And the bank doesn't own the house any more than you or the bank. Our mortgages hold the bank, right? Own the house, right?
That is correct. The bank doesn't own the house. They simply have a lien on the property, just like any other mortgage.
Okay.
Where the lender places a lien on the property for collateral purposes.
Right.
And when the loan is paid back, then the lien is removed.
Okay. So it's kind of like when you say, hey, do you own a house? It's like, yeah, me and the bank do. It's the same thing with a reverse mortgage.
That's correct. With one primary exception is that with a reverse, you're not having to make a payment.
Okay.
Whereas with a traditional mortgage, you're having to make a payment.
Okay. So in a traditional mortgage, like what I have, I put a certain amount of money down. I'm borrowing a certain amount of money. I'm paying a certain amount of interest rate to the mortgage company. And so every single month when I make a payment, a principal amount decreases.
Correct.
Okay. So the reverse of that is a reverse mortgage, where if I was, 63 years old?
62.
62.
Correct.
Okay. So when I turn 62, which is going to be in 50 years from now, just kidding. So when I turn 62, this program's probably going to still be around, and if I needed money, I could come to you and say, all right, do I qualify for a reverse mortgage?
Correct.
And you're going to say, let's make it easy. Let's say my house is paid off. Okay. My understanding through conversations with you and the people that we've helped is essentially the mortgage is kind of split in half, and I know that that's not exactly correct, but basically the bank would own half of the house and I would have half the equity in the house. And so let's say it's a $200,000 house. Essentially the mortgage is $100,000. There's a certain interest rate. I have to continue paying interest on insurance on the house.
Correct.
And I have to maintain the house.
Correct.
And I have to maintain insurance on the house.
Insurance and taxes.
Insurance and taxes.
Correct.
Okay. Is that essentially correct?
Kinda. Your initial statement was the bank owns half and you own half.
Okay.
is incorrect.
Okay.
The bank owns nothing, as I said earlier.
It's a lien.
The bank has a simple lien on the property. You
Okay.
still own 100% of the home.
Okay.
The borrower still always owns 100% of the home.
Okay, okay. So, okay, let's use that example again. I come to you, my house is paid off. Can I get a reverse mortgage? I'm of age. You look at other qualifying things, I'm sure.
Sure.
And you say, yes, we can do this for you. We're going to go out and get an appraisal on the house, right?
Correct.
Okay.
Just traditional FHA appraisal.
Traditional FHA appraisal. You'll make sure that the house is habitable. I haven't run it down,
Correct.
so it has to be in good working order for
Correct.
you to insure it, for one thing, and to protect your asset. So it's paid off. The appraisal comes in at $200,000. I'm going to have a lien on the house for $100,000. What about that other $100,000? Does that just come to me, or what happens with that money?
The other 100,000 is an equity in the property. And,
Okay.
And that's retained equity that you own.
Okay.
And it's just not accessible through the reverse mortgage. HUD puts a limit on how much you're able to access through the program.
Okay.
So, in essence, you're getting access to about half of your equity.
About half of the equity.
And
Okay.
the other half stays in the property, stays as part of your asset base.
Okay. So the house is paid off. Half of the equity, $100,000, stays with the property.
Approximately.
Okay. And that's the lien that the mortgage company is giving to me, the loan.
Correct.
Correct? So I'm essentially being handed $100,000 that I can utilize to live my life the way I see fit, right? And the other half of the equity is in the house.
Correct. In simplistic terms.
In simplistic terms, absolutely. There's a lot more that's involved in
Sure,
this, but that's
sure.
very simple.
Because one of the big keys of reverse mortgage is how much you're getting. That 50% equity
Yeah.
could be greater depending on your age. Because the older you are,
Mhm.
you are able to make more of the equity accessible to you.
Oh.
A 90-year-old gets more of the equity available to them than
Okay.
a 62-year-old would.
Okay.
So as you age, it's really even a greater benefit to you.
Okay. So I want to go to the comment about, well, I don't want the bank to take my house. My kids were brought up in this house. I want them to have something. So again, I'm going to do a very simplistic scenario here. Okay. So if I wanted to will my house to my niece, okay, and I take a reverse mortgage, and let's say in 20 years, I can't live there anymore, okay? So the initial lien on the house was $100,000. Now that has increased.
Correct.
Because I'm paying, the bank is charging interest on that lien, and let's say that over 20 years, it's gone up $50,000. I'm just using simplistic numbers here.
Sure.
There's no calculations. But let's just say that the loan amount has gone from 100 to 150.
Okay.
Now, remember that when I got the reverse mortgage, the house was worth $200,000. That's where that initial $100,000 came from.
Correct.
Right? And so after 20 years, let's say now that the house is worth $300,000. So, and I moved into assisted living, whatever. I'm going to sell the house, and I sell the house for $300,000. That $300,000 pays off the note, which has now got up to $150,000.
Correct.
Right? I'm paying other sales fees and such like that. So essentially, $150,000 is coming back to me.
Correct.
Do people tend to put their house in a will?
Absolutely.
Okay. So there has been a situation, and you weren't involved in this, but somebody contacted me to sell their father's house. It was a reverse mortgage. And I don't remember exactly what the numbers were, but essentially what was owed on the house was more than what we could sell it for. Okay? And even if it was equal, there were still fees associated with where the bank was not going to get 100% of what was owed to them. And so it was essentially a short sale.
Okay.
In this particular case, and I don't know if it's the case for everything, in this particular case, the heirs just said, take the house, bank. So they gave the house back to the bank. And the reason why they did that is because that reverse mortgage did not affect the heirs in any way.
That is true.
It didn't affect their credit. They weren't making payments on it. It didn't do anything negative to them at all.
That is correct. And the reason why
Okay.
is because reverse mortgages are non-recourse. Non-recourse simply means that if the house is sold
Okay.
and the proceeds are insufficient to pay for the amount of the loan or the
Yeah.
amount of the lien that needs to be paid off,
Right?
then FHA insurance covers the difference.
Okay.
And pays the note, pays the difference, I guess
Okay.
is a good way to say that. And that way the lender is made whole
Okay.
and the borrowers have no personal liability. That is a big key to this program, is that there is no personal liability, and the FHA insurance covers the difference if it's ever upside down or a short sale.
Okay, so let's go back to my scenario where I've willed this house to my niece. Okay, I'm in an assisted living, and we can't sell the house. So now it's short. Is this going to affect my niece because I've willed this house to my niece?
No,
It's not going to affect her.
because the heirs have the same benefits as the original borrower in that the loan is still non-recourse,
Mhm.
still there's still no personal liability.
Right. In the in the situation that I was in, the heirs wanted a lot of things that were actually attached to the house. Chandeliers and faucets and stuff and ceiling fans. And so when I was asked to sell the property, there wasn't a lot in the house.
It's a skeleton.
It was a skeleton. They had literally gutted it to the point. Does that have any effect on the heirs? Does the bank have any way of going back to the heirs and say, hey, we had a house that was worth $150,000, but now that you've ripped everything out of it and deteriorated it, it's now worth $60,000.
I would think the rules, if it's attached to the house and it's considered part of the
Right.
the home, then there is probably some liability there.
Right.
But I would have to do a little research to see just to what extent
Okay.
the lender would chase after that.
Right. Right. Well, if they're going to be made whole by FHA, most likely they're not going to have enough desire to go after anybody.
Yeah.
I mean, that's my guess.
And I personally not had that situation pop up, but it is interesting.
Yeah. Well, I have some interesting stories. We're not going to get into it though. But so you're with Reverse Mortgage USA?
First Reverse Mortgage.
First Reverse Mortgage USA.
We are a division of Cherry Creek Mortgage out of Denver, Colorado.
Okay. All right. So you've been doing this for 15 years. How long has reverse mortgages been in existence?
About 30 years.
30 years.
About 30 years.
Okay. How have, in the last 30 years, I know that you've been with it for 15, but 30 years, how has the program changed? Has there been any dramatic changes to it?
Well, there have been changes in many areas in order to make the program viable and healthy for the borrower and for the government that is doing the insuring through the
Okay.
FHA. The tables that reflect the payouts to the borrowers have been adjusted over time.
Okay.
The amount of money that they're able to pull from the equity of the property has been adjusted up and down.
Okay.
And just the overall balance of the program has been made a little more conservative, so the life of the program is healthy.
Okay.
For both parties.
Okay.
And the government has tried to do a good job of reducing the number of foreclosures
Mhm.
and losses associated with it. And I know that I'm not part of this program's management,
Sure.
but I know that they're doing it for the benefit of both the borrower and the government.
Okay. And you brought up foreclosures. How did the Great Depression affect the reverse mortgage industry? Did it?
I haven't seen a significant impact other than maybe an increase in demand,
Okay.
a slight increase. But the reverse mortgages have been clicking along at a pretty good rate.
Okay. So.
And with the baby boomers coming on, there's
Right.
and they're already here. I'm one of them.
Okay.
Me and the rest of my boomers are looking at ways to improve the quality of our lives, and the reverse mortgages do that for them.
Because now they have money that they can utilize to take care of themselves and
Correct.
improve their life.
The home is become a savings account or a piggy bank.
Yeah.
For folks.
Yeah. So going back to the Great Depression, 2008, 9, and 10, if someone got a reverse mortgage, let's say in 2009, and at that time the appraisal came in at $100,000, and now it's 2019, the values have gone up a lot.
Sure.
Okay, so let's say that their house at that time was worth $100,000, and now it's worth $200,000, which is very possible.
Yeah,
Okay.
I would think easy.
Yeah, are those people who have an existing reverse mortgage able to go and do it again and get more money? Say, hey, now the house is worth twice what it was in 2009. Can I get more money?
Yes, they can, and it's called a reverse of a reverse.
Okay.
Where we do the calculations again that HUD
Mhm.
gives us today, the formulas, and we compare those numbers to what the
Right.
existing loan is
Yeah.
on the property, and then we're able to make that assessment. It works for some, it doesn't work for all.
Right, right. So the whole reason for me doing these interviews is to bring to you, my followers, resources. And you never know when you're going to need a resource. You never know where you're going to find that resource. Now, we're not going to mention any names, but the scenario is this. I've known this wonderful lady for a long, long time, and she asked me to take a check to Frost Bank. And so I did. And so I walk in there and I'm waiting to talk to her banker. And her banker happens to be talking to this lady about financial issues. Now, I'm not a financial planner. I'm not a lawyer or anything like that. But everything I overheard, I had a resource for. And so we sat down with now my new best friend and said, look, I need to introduce you to Tim Malcolm because I think a reverse mortgage may work for you. And so I did. And where is our friend now in that process?
She's at the beginning phase.
Okay.
We've done an assessment of her property, and
Okay.
we looked at the numbers, and the numbers do work for her.
Okay.
And we're working through the details.
Okay.
As they say, the devil's in the details.
Right.
And but she's looking pretty good.
So.
And it will definitely make a huge difference in her life.
Oh yeah, definitely. And we're not going to disclose any details. So when you say it's pretty good, is it better than flipping a quarter?
Yeah.
Yeah. Okay. Very good.
Yeah.
Very good. anything that I didn't bring up that you think is critical with people thinking about, will this actually work?
Yeah, there is another piece of the program, in addition to refinancing an existing property, which is what we've primarily been talking about.
Okay.
There is the opportunity with a reverse mortgage to purchase a home outright.
Oh, that's right.
And with the purchase program, a borrower can go purchase a home by putting their down payment into the transaction, and we finance the difference, and they do not ever have to make a payment on the home. They simply have to make their taxes and their insurance.
And I think I sent over to you another person.
You did.
How's that one going?
Worked out great.
It worked out great. Fantastic. So, guys, thanks for listening to this. We've been talking about reverse mortgages. There's no voodoo or witchcraft going on in here. It's a way to help your friends and your family. They have to be 62 years old,
Correct.
right?
62 years old. They have to have enough equity in the home.
Okay.
And that's roughly 50% or more
Okay.
of the value of the house. And they have to have had a reasonably decent payment history of their debts.
Right.
But not quite as stringent as a traditional mortgage.
Okay. Very good. So, guys, if this is going to be something that can help out your friends and family, please let me know. Tim, is it okay if they call you directly?
Absolutely.
Okay. Tim, tell them what your telephone number
My
is.
telephone number is 210-787-4025. I'll repeat that, 210-787-4025. And leave a message, or I'll pick up the phone, and if I'm not there, you'll hear back from me soon.
He will call you back, and please let him know that you saw him on the Facebook, the interwebs, and that it was this interview. Thank you very much, guys.
Goodbye.